Welcome back to Curious Commerce Capital Budgeting Series, Part 4. Let us start with a simple but important question. Are all financial decisions the same? Think about this. Is buying shares in stock market same as buying the machine for factory? Both involve the money, monetary transactions, but are they the same? The real answer is no. Different financial decisions serve different purposes. Today we will clearly understand two important types of decisions in finance. In real businesses, companies deal with both short term money and the long term money. And this creates confusions. Many people think all financial decisions are the same. But this is a big mistake. Wrong understanding leads to poor planning, wrong investments leads to the financial problems. So clarity is very important in finance. Now let us understand the main types of decisions. First one is the capital budgeting decisions, and the second one is the working capital decision. Capital budgeting deals with long term decisions, but the working capital deals with short term decisions. Both are important, but both are completely different. Specifically, the capital budgeting focuses on the long term investments. It involves large amount of money, long term commitment. For example, buying machinery, construction of the factory building, or the opening a new branch. These decisions affect the business for many years. So once taken, it is very difficult to change. That's why capital budgeting is very important. But the working capital focuses on the daily operations. It deals with cash transactions, inventory, receivables. For example, paying salary to the staff, buying the raw material, managing the inventory or the managing the stock. These are the short-term decisions. They keep business running smoothly. Without working capital, even a profitable business can fail. The key difference between the capital budgeting and the working capital decisions. The first difference is the time period. Capital budgeting is majorly focuses on the long-term decisions like the 5 years, 10 years or more than that. But the working capital always focuses on the short-term decisions. It may be for the days, weeks or months, not more than the year. It is very simple to understand. Capital budgeting means the future planning. The working capital means the present management. The second key difference is the nature of decisions. Capital budgeting always the strategic decisions. It affects the company's direction. The working capital always related to the operational decisions. It means the day-to-day management. For example, opening a new factory, it is a strategy. You consider the key difference between the capital budgeting and the working capital on the base of the time duration. So when you open a new factory, it is for the longer duration, maybe for the 5 years, or it may be for the 10 years or more than that. It is a strategic. It is a strategic planning. But in the case of the working capital, it is manage the operational activity of the business. It is for the short term. The third key difference is the risk or the risk level. Capital budgeting is the higher risk because the large investment plus the longer the duration. The capital budgeting we use when the higher risk is there. It means that related to that decisions, the huge investment will be takes place, and as well as for it is for the longer duration. But in the case of the working capital, it is the moderate risk level because the short term and the flexible. For example, the wrong factory investment leads to the huge loss, but the wrong inventory decision is the manageable loss, right? On the base of the risk level, the capital budgeting is higher risk and the working capital is the moderate risk. From a manager's perspective, related to the capital budgeting decisions and related to the working capital decisions, both the decisions are equally important. Capital budgeting ensures the long term growth, the working capital ensures the short term survival. If anyone fails, business will suffer. So managers must maintain the balance between the long term and the short term, or in other words, the capital budgeting decisions and the working capital decisions. Let us quickly revise the today's session. The capital budgeting means it is for the long term, it is a strategic planning, and involves the higher risk. In case of the working capital, it is for the short term or the day-to-day activities. It is supportive for the operational decisions or operational activities, and the risk level is very moderate. The final idea about the today's session is both are important. Capital budgeting decisions and working capital decisions both are important for the business success. In the next video, we will learn about the step in capital budgeting. This will help you to understand how decisions are actually made. Stay connected with the Curious Commerce to learn real commerce. Follow Curious Commerce Financial Management Hub in WhatsApp channel. Please like, share, and subscribe. Once again, thank you all.